One of my favorite stocks has been unreasonably beaten down by Wall Street and is currently trading below the initial offering price. This stock has huge potential to be a turnaround play, and it could eventually 2x within the next 5 years. Let's go. The company that we're going to be diving deep into is called Zuora, which trades under symbol ZUO. Zuora is a software company that provides software for businesses to help manage and launch their subscription-based business services. Their software does things like automate recurring bills, collections, quoting, revenue recognition, and subscription metrics. First, we will talk about the ability for the company to be a disruptor in the space that it's competing in, and then we'll talk about the fundamentals of the company, and finally, we'll talk about the main reasons to be bullish on this stock. They already have big name customers like CarGurus, Headspace, Zoom, DocuSign, Kia, Box, TripAdvisor, Autodesk, Ford, Deloitte, and several more. These customers use Zuora for their subscription services. There's a good chance that if you purchase something from any of these businesses, Zuora is doing the real work behind the scenes. Zuora is placed in the subscription software sector, which is growing in popularity among many companies because it allows businesses to receive recurring revenue while building a long-lasting customer relationship. The market for subscription management was worth $3.8 billion in 2018 and is projected to grow to $10.5 billion by 2025. Zuora could be a key player in the future of subscription management softwares. Right now, Zuora is trading at a very cheap valuation, especially considering that it's a software as a service company. Most of the time, we would expect that software companies trade at a rich valuation, but that's not the case for Zuora. The current market cap for Zuora is $1.7 billion as it trades at about $15 per share. The company is also expected to grow to about $335 million in revenue this year in 2021. This gives it a price to sales ratio of 5.74. Q1 for Zuora was very good. The revenue accelerated to almost 80 million, which is a 13% year-over-year increase. They also saw their subscription revenue grow to $65 million, which is a 20% increase year-over-year, which is an increase from last quarter's 15% growth. These numbers are pretty respectable, but one important piece in the balance sheet that no one understands is that the professional services revenue is actually down. Hear me out, but this is actually a good thing. It costs a lot of money to run the professional services, so they're actually currently partnering with the GSI, which is another software integration service. You can see that they're currently losing money on their services revenue, so it's actually in Zuora's best interest to bring the services revenue down and just outsource it all. I think many people on Wall Street are overlooking this because they don't understand it, which gives us a perfect opportunity to pick up shares at a low price. Additionally, Zuora beat expectations while releasing the Q1 earnings, but the market still had a negative reaction. Zuora is only trading at a 5.74 price to sales ratio, while its revenue growth is above 20%. As a comparison, other competitors like Oracle trade at a price to sales ratio of 5.5x with a projected revenue growth of only 4%. We can see that Zuora has a higher expected revenue growth and trades at a similar price to sales ratio, which indicates that this could be a very good deal. Zuora has a very strong leadership team, with the CEO being Tian Zhao. Zhao used to be a chief strategy officer at Salesforce. He left Salesforce to start Zuora after realizing the missing elements at Salesforce. He also wrote a book called Subscribed in 2018. Another leader at Zuora is Robbie Traub. Traub was a vice president of Adobe before joining Zuora. Adobe was one of the first companies to fully incorporate the subscription business model. Additionally, a leader named Sri Srinivasan, who is the chief product and engineering officer at Zuora, used to be a chief technology officer at Microsoft for 9 years. Clearly, these leaders have experience under their belts, and I would not be surprised if they led Zuora to becoming a groundbreaking company. Ultimately, Wall Street and other investors are massively overlooking this stock, and they have their bar set very low for it. As Zuora continues to grow, I think it'll be no doubt that Zuora smashes these expectations and causes everyone to realize how valuable this company is. Their expectations are so modest for this company that the stock direction will most likely go up from here. I would suggest that if you can pick up this stock for below $15 or $14, it would be a steal to hold for the long run. As always, don't forget to like and subscribe. Let me know what stock you want me to analyze next. Peace.